how the interest rate increase affected the real estate market and you as a real estate buyer. In this video, we'll be discussing interest rate hike and the effect that it had on real estate market as well as the affordability by comparing two different price points. You want to stay tuned because I also will be discussing the most common question that many buyers are asking me: should I buy now or wait? If you're here for the first time, my name is Axel Ziba. I'm a managing broker founder at Maxit Realty, and I have been posting video every Thursday, so definitely subscribe to my channel not to miss out on every different subject in real estate investing, and that's gonna bring you quite a bit of a benefit. And I would appreciate if you hit that like button, and if you have any question, don't hesitate to put a comment down below. To start, let's take a look at BOC or Bank of Canada's increase of interest rate down the history. As you can see right behind me, BOC hold the interest rate for a long period during the pandemic. March 2nd of 2022 was the first increase, and then September 7th of 2022 by 0.75. To dig further, whether this is going to be the last increase or the Bank of Canada is deciding by end of October to see whether there will be another increase neither or not, let's take a look at inflation. Government as well as the Bank of Canada started looking at interest rate as a tool to maybe stop or reversing the inflation. When the war in Ukraine and Russia happened, of course that added a fuel by increasing the cost of fuel into the inflation. That pushed the BOC to make a decision to increase the interest rate by 50 points in March 2nd of 2022. But as the months were going by, the inflation rate was rising, so as the increase of interest rate announcement by Bank of Canada. As you can see on top of the chart, it says the next update will be October 19th. That would be another decision making for Bank of Canada, as we're still standing at almost 7% inflation rate. But how does the increase of interest rate affect the real estate market and the affordability? Here and now, I'm going to be analyzing two different price points, one at $700,000 and the other one at $1 million. I'm going to be analyzing what we were about a year ago in terms of interest rate in regards to the affordability and payment compared to what we are now. These examples were given to me by one of Vancouver's best mortgage advisor, Eitan Pinsky at Pinsky Mortgages. I have put their company information down below and direct contact for Eitan Pinsky, so you can definitely get a hold of him. He's one of the best advisors in mortgage that you don't want to miss. $700,000 purchase price point with 20% down. So 1 year ago, we would have needed an income of $95,000. Today, we need an income of $116,000. That's 22% increase in required income. Let's go further. Another way of looking at this is with that $95K with 20% down payment of $140,000, that could get a $560,000 mortgage before, can now only get $444,000. This is 26% decrease in affordability. The payment would have gone from $1,865 a month at 1.25% variable, or $2,150,000 at 2.29% fixed, to now $3,022 variable and 5.1% and $3,154 at 5.49%. That's basically an increase of 47% in monthly mortgage payments. As you can see in that example, the affordability rate decreased for 26%. With $1 million price point with 20% down, 1 year ago, we would need an income of $135,000. Today, we need an income of $165,000. That's an increase of 22% for required income. The $135,000 that could get a mortgage of $642,000 now, as opposed to $800,000 before. This is a decrease of 24%, or maybe in a line of 26% because they have to consider taxes and a strata fee payment. The payment would have gone from $2,665 a month at 1.25% variable or $3,070 at 2.29% fixed to now $4,317 variable at 5.1% and $4,506 at 5.49. So basically, it's an increase of 47% in monthly mortgage payments. As you can see in the second example, even for $1 million price point, there's 26% less affordability. How is it going to be affecting the real estate market? There is no doubt the real estate market currently is changed to what we were a year ago. In order to analyze the pricing and whether it has affected the pricing to go downturn, we need to analyze every single sub-area or sub-market for itself and every property in terms of its shape, type, and condition. I made a video about how to price your home, which also helped many buyers understanding how to make an offer based on price analysis, comparable home price indexing, and sales ratio. If you want to know more, definitely click on the link above so you can be directed and get educated on how the pricing is done. It is super important for any buyers to focus on a specific area and understand the price point, understanding the trends and the changes in the market so you can make an educated decision based on that information. If you like the value of this video so far, give it a thumbs up, or better yet, since I post videos every Thursday, definitely subscribe to my channel. Speaking of making a good and educated decision, when it comes to current market, I get many questions such as, Axel, should I buy now or should I wait? In many of my videos, as well as speaking with my clients, I mentioned that no one can hold a crystal ball and predict the future. However, we work based on trends, and these trends, they show an upward in the chart of real estate despite many dips. As a heartbeat, the real estate has ups and downs. It goes upward when you hold the property for a proper timing and a long term. Also, the trend shows that many who time the market and step on the sidewalk and look into finding the bottom line of the market, they might have either missed it out or they woke up when the market was already up. Of course, when it comes to purchasing the real estate, it all depends on your motivation. And you need to understand if your motivation falls under purchasing something to flip it in a very quick way, maybe you want to think twice. But if you're thinking of real estate as a long-term investment, as it's supposed to be, then you're in the right term. In those two examples, we talked about 26% less affordability. I also wanted to highlight and bring out the positive of what this market can offer. If you have your down payment and already have gone through your pre-approval and ready to buy, then this market is the best place to be as it provides you with more selection so you can find that dream home. A year ago, you had 5 to 10 minutes to make a decision and coming up with an outrageous pricing that went above the listed price without doing your due diligence. In contrary, this market will give you an ample time to find that dream home that check marks maybe 80% of your wish list. And not only that, you also can do your due diligence patiently. My advice is to always prepare your finances for the worst case scenario. Imagine if you live in a disastrous area which gets hit by flood or tornado. It is important to always be prepared. So if the flood or tornado hits your area, you come out of that situation safe with no devastation. This is the exact same situation when your financial situation is prepared. One of the biggest reasons behind the stress test by BOC was for this particular reason. Remember, the whole situation is that the market has dips, and when it has dips, you need to survive that dip. And if you do, then the market will correct itself based on the trends that we studied before, and the chart always shows upward. And at one point when you hold your property long enough, it will give you a healthy equity and fruitful result. To summarize, I want to say stop timing the market and treat the market to your motivation. If your motivation is to buy something and hold for a long term, then start looking to your dream home today. Thanks for watching this video. Please hit that like button right there and please subscribe to my channel as I put videos out there on a weekly basis every Thursday.